Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 3rd of September. All right, now coming back into the markets, 2 days ago, 36 hours ago, fully bearish up on the dollar. And we've seen a pretty swift little turnaround. And this has been a culmination of a couple of things kicking into gear, a few macros, as well as, just residual geopolitical stuff. But the US ISM manufacturing numbers, much better than expected. We then had the European, start with the retail sales figures yesterday, really weak as well. Where are we? If I can just find those. So we had a bunch of European data. Here it is here. Much weaker. That really put some solid downward pressure on the euro, puts the dollar index up, and the pressure's off. Now, I still don't think the whole dollar bearish scene is over, but I tell you what, it's very close to concluding. And what I mean by that is, if I just shrink this chart up, this is the dollar index overall, and you can see it's, had its moments, but we've just had that little period of weakness. And it often looks, the currencies often look their worst at the very bottom. And this is pretty much the case. Some stops triggered as it broke down through 92.20. We're back above this level now. We're at a bit of a crunch line here. If it goes above 92.85, it's a clean run up to 93.80, right? And the market is already short dollars, right? So I think right at the moment, it's very hard to sort of go from, really bearish dollar based on what the Fed were doing with regards changing their profile to labor markets as opposed to inflation. It's a bit of an overall shift in structure, but that's been pushed aside. We've had a bit of a change of data, a change of sentiment. The market's been caught short dollars, and we're very close to this thing popping aggressively, which I'm sure Donald wouldn't be happy. He likes to see a weaker dollar. Obviously, most countries do because it makes them more competitive. It adds to the whole economic growth and takes pressure off the central banks. So that's what we've got at the moment. Now, if you look at the one important thing, right, you look at the risk on. I've been talking about this for a couple of days. This is like the data here out of the equity markets. And when we talk about risk on, risk off, this is a risk on day, not a neutral or slight risk on. This is risk on, right? Which would mean Aussie, Kiwi higher, Euro higher, dollar down, but we're not seeing that, right? We've seen the dollar rally, and I don't think it's because of this safe haven factor. It's just that relationship between the equity markets and the currencies at this point has completely broken down. So just be aware of that. In saying that, the correlation matrix is telling me the S&P 500, the Aussie yen, is moving opposite direction very closely, 91%, and so is sterling yen. So there's a couple of pairs that you can highlight in that correlation matrix if you're looking for a specific cross in particular to get onto that, to get onto. Now, coming back to the major currency pairs. So there's a few of these pairs which are really, to me, at the crossroads. Still, I think this could be a bit of a recharge for the dollar to go weaker again. But I tell you what, if it doesn't eventuate and it breaks a couple of these levels, 118.25 here on euro in particular, probably down through 72.85 or 72.50 on the long-term charts. If I just give you a look at the Aussie here, what I'm looking for is, see, this is the noise, right? The hourly chart. You get a situation where we've topped out. It's coming down through like a shorter-term support line. We've got another line here at 72.80. What I'm really looking at very closely is this chart here. This is the daily trend line. There'll be a cartload of stops under this level, which is 72.50. Right? For me, I'd rather wait till 72.50 broke than try and jump in, around 72.80, because that would tell me that the overall uptrend is over. Now it's got a bit of work to do to get there. So that's what I like to see when it breaks through these levels. Now, the rest of the pairs, well, as I mentioned, euro is, the good thing about the euro move is, okay, it's on a bit of US dollar strength on the back of macroeconomic data, a bit of weak European macro data as well. So it's down, it's falling for good reason. And that makes me feel a little bit more confident getting into a short position because it's based on macros as opposed to just random geopolitical events. Sterling, it's hanging in there, but it's doing a bit of a dance. We've got a few support lines to get through. I'm not as confident with euro. So Aussie potentially down, euro potentially down. The Kiwi is the one pair which is beating everything else up, right? Kiwi crosses are all up against everything else. It's holding its ground. Now, at some stage, that will fall. If these other currencies fall, it will catch up, but just a matter of when. It's all about timing, right? So, and dollar yen, well, forget about dollar yen. If you're trading the yen, it's got to be through the yen crosses, right? That's where the action is. And dollar CAD is pretty much just cruising sideways. But check out that fall here in oil. You've got to think dollar CAD's got to catch up to that at some stage. But that's where we are. Now, let me just explain. If I just bring you back to the daily market insight, there's a little bit more to explain here. And I've had a few traders asking me, and this is what I've got to hear with the profile of the markets. Now, there's, sorry, if I just include that legend, you'll see what I'm talking about. There's a potential reversal here on a number of pairs. The dollar index obviously will coincide with the breakdown of euro, right? These, euro is 58% of the basket there, so it makes sense. Sterling, potential reversal as well, and Aussie. I like the euro and the Aussie as potential things that will fall. Now, usually in normal market conditions, you look at the Kiwi here and it's sort of going up short-term and long-term, I would be a buyer. But the Kiwi is one of those currencies that actually follows the other currencies. It doesn't usually lead them. So it will be important to see how that goes. It may be an opportunity to sell later on. Now, coming down to the, some trading opportunities in the market, I've included an entry date so you sort of know when these things are being added. At the moment, to try and capture that reversal, dollar index, euro, Aussie, and sterling, I've got orders in there to capture those. Dollar CAD is still looking for a sell on a rally. It's still got a decent way to rally back towards this resistance level, but I still like that. That may change. Now, the key to this, right? Now, these opportunities, and this is very important, it's more of an educational piece, I guess. Like, you've got these key levels, right? And we've got the direction. So you've got these, and this is what we're looking to do. As a trader, right, just don't go in blind. When it gets to these levels, you need to work out what's going on. Like, for instance, with the dollar index, is it going up? Is there fresh news out? Or if there's no news, it might be just a retracement. So if there's fresh news, there's a big chance of this break going through, right? That's important you understand that, you can identify the entry levels and you can identify the direction and the potential opportunity. But really, if you have the opportunity, make sure when it gets close to these levels, you do come back and see, why is it moving, right? Is the break trade really a break? If there's nothing fresh out, it might be just a false break, right? So you got to sort of work that out as you go forward. That's the art of, or the skill of interpreting your analysis in the market. All right, so that's what I've updated there. We've got plenty of opportunities. I tell you, it's been frustrating. Another key question a lot of guys have been asking me is, what's with the trade plan? Well, I tell you what, you have a trade plan to manage weeks like this. We had a lot of opportunities sort of at the start of the week where the dollar looked like it was just going to fall completely out of bed, and you give yourself an opportunity. But when these markets, if you just went in with no plan, you'd still be short US dollars and you'd be getting hammered. The plan takes care of any weird things that happen in the market and takes you out when you're wrong, right? We know where to get in, where to get out. Let the plan take control of things. If you didn't have a plan, you would be short the US dollar. Still, if I get the dollar index up, I mean, if you didn't have a plan, you'd be short down here and it's now up here. Your account is probably almost drained, and that's not professional trading. So here's that level on dollar index, 92.85. I think this is, I'd love to see this thing not go in Asia. The Asian move would normally be maybe a false break. If it's in Europe, that means Euro's moving, right, down. And that would be a more convincing move, more volume, more traders trading it in the European session because it's a euro dollar index, right? Okay. All right, guys. So I am tuning up some of the workshop stuff, hence why I'm getting a little bit more explanatory in my insights. But anyway, good trading day. Keep an eye on these reversals. Big chances. All right, guys. Have a good one.